Now I want to do a video about how to use margins to go long, basically getting 10 times your money. Remember, anytime you put money in margins or isolated margins, they give you 90% more on your money. So if you have $10, they give you 90% more to make it 100. So that's why they call it a 10x, because if you had $100 to make it 1,000, your $100 minus 1,000 would leave 900. They would loan you the other 900 so that you have $1,000 inside your trading option. So let's go ahead and take a look here. We're going to actually do ApeCoin. So first thing we got to do is go to Ape. We're going to hit transfer on Ape. We need to fund this, right? So let's go ahead and put $20 into ApeCoin, right? Now that we got ApeCoin here, we got it put in here. You can see right here that we have $20 in Ape. And all you have to do to get money into Ape, you just pick the coin you want, hit transfer. It comes from your trading account, obviously here, or your main account, or wherever you have the money. So main account or trading account, and you can transfer right to your margin account into your ApeCoin. And then it's going to pop up here in your total. So right now I have $20. The best thing about this is I'm able to put $200 into ApeCoin without actually having $200. This is why it's awesome to use margins. It's because if you don't have a lot of money to invest, this gives you money. So here you see how it's lending me USDT. It's lending me $180 worth of USDT because I have 20. So 10x $20 is 200. So $200 minus my 20 is 180, and that's what they lend me, $180. So I'm going to go ahead and borrow this $180 of USDT. Why? Because I want to have more money to basically buy ApeCoin. So now I'm going to go back to margins, and here now my Ape, notice how my $20 has now become 200. My debt to ratio is 90. Now the importance of a debt to ratio is it's the percentage of your loan, right? So the ideal is to get the 90% down to 80%, 70%, 60%, and eventually nothing so that you can take all the money. But you can take out after 1%, 2%, or whatever. You can always cash out, but you want it to go the lower it goes, it's like golf. The lower the percentage, the more money you made. So now what I'm going to do, now that I borrowed the 90%, and what it basically is I have, out of the $200 in the total, 20 of that 200 is mine, right? So they lent me 90%, which made it 200 bucks. That's what debt to ratio is. When the debt to ratio reached 97%, they close the deal and give me back 3% of my $20 and say, you don't know what you're doing, and they kick me out, and I can go pick another coin. But you never want it to go that high because that's called being liquidated. But let's get this trade started because ApeCoin is actually hot right now. So I'm going to click trade because right now what I want to do is buy ApeCoin and get in on this run. So ApeCoin's at $2.24. So I want to go to stop market here, and I want to go ahead and I want to buy at $8.21. Or actually, let's try to get a little bit cheaper. Let's get, oh, they're jumping here. $8.21. We're going to go with 100%. We're going to hit buy. There we go. So we are now, we heard that little ding, order history. As you can see here, I have just bought ApeCoin for $8.21. Okay. Now, a lot of times if you look at the charts and you get yourself a good entry, you could get it for $8.13, $8.14. You'd have to go to charts, look at your trading, and decide what your entry price is going to be. What I'm showing you here is just how to set the entry price that you should already know that you want to enter on. If you don't know that, then you want to take the trading courses and learn how to trade Fibonacci's, how to get in at that time. Right now, I'm just going through the perspective on how to buy ApeCoin on a margin. So now we are in here for $200 at $8.21. Right? To check that we are in here, we're just going to click our margin account. And now that we have this here, we should have basically set up to where we have $200 worth of USD and liabilities, but we also own $200 worth of ApeCoin, right? And that's going to show us on our margin account right now. Pucciano, you so crazy. What, you seeing shadows, Batman? That's right. You tell them. You tell them to make sure they get a good entry point. Otherwise, exactly. He knows. All right, so here we go. So here we go. We have our liabilities. We have $180 in liabilities of USDT, and we own 24.3 ApeCoin with that money. So now our objective is literally to ride this out. It's at 90%, so it's kind of, we just got started. So the first thing I want to do here is take a look at my liquidation price. Liquidation price is that 97% debt to ratio. That means if ApeCoin falls to $7.62, they will liquidate this contract, end it, send me back 3% of my money, right? So 20 bucks would be $6. So out of my $20, I would get $6 back out of my 20, and I would lose the other $14 to the liquidation. So that's what we don't want to happen. So we want to make sure that we don't get liquidated. So first thing we need to do to make sure that we don't lose our money is to set what's called stop markets to make sure that we don't actually lose money. So we go back to trade now that we know that everything is set up properly. And we're going to set what's called a stop loss or stop market. And the reason why we set the stop market is so that we don't lose money. So what I'm going to do here is that if ApeCoin starts to fall to a certain level that's lower than I want it to be, I don't want to lose that money. And just like I said, you need to take the trading courses to learn where to set your stops. But here's just general rule of thumb. I'm going to take a look at here, go to the bottom of this candle, right? And then the bottom of this wick. All right, I'm going to say, okay, so my wick is 733. The bottom of my candle is 746. I'm going to come up here to $8. So I'm going to put a stop here and say, if it reaches $8, I want you to sell 100% of the ApeCoin because and you guys don't see it, but I'm right here. Let me pull this up here. Set your stop market. Go in here, and I'm going to select 100%. All right, so here, $8, 100% sell Ape. So at any time, if ApeCoin hits $8, it will sell 100% of my Ape and stop the long or the position that I'm in going up and stop me from losing money. So I'm gonna kind of split the money here and literally go out at a certain level, and that's it. Now the second thing I want to do is basically, now that I'm protected from actually getting liquidated or losing more money than I want to lose, I need to set a stop market to take profit. So if I got in at $8.21, you know me, 10% is what we always want to make. It's the only time you make a trade is if you can make 10%. So that means 10% would be 80 cents. So that ApeCoin needs to go from $8.20 to $9. So you would simply put stop market, and then you would put sell at $9, and you would sell 100% of your ApeCoin at $9. And that's it. And then when you can set and forget it, and then when ApeCoin gets to that price, it'll take profits for you. Now, a lot of people will set profits at the 5% mark and take 50% profits so they get something. And that's simply done by this. So let's say we want to take profits at $8.75. And we want to take 50% profit. So you just click 50%, sell Ape. And then you go back here and go $9. I'm going to sell the rest of my Ape, so sell 100. So that way you have two selling levels where let's take T1 and T2. T1 is $8.75, T2 is $9, and that's how you take profits on your longs without paying attention to it. And that's pretty much it, guys. And when you're completely done and you want to get out of your trade, you just hit market, hit 100% sell, right? And you can sell it, or you can be very specific so that you don't lose money, that much money, and I can go, okay, I want to sell this, and I'm going to sell it $7.92, $7.92. So as soon as it hits that low, boom, it's out, right? And that's it. And that is how it's done. Now, this obviously got triggered already because ApeCoin fell from the $8 mark. And since it already hit the $8 mark, it actually sold for me. So since it sold for me, I can go back to my margins. And what we're going to see here is that I still have a debt to ratio, but I don't have any ApeCoin because my stop market loss or stop market, the amount that I was willing to lose at $8 got triggered by ApeCoin, so therefore it sold it, and now all I have is USDT. So right now and it's not too bad, guys. So I borrowed $180 of USDT. I shorted it with $200. I lost $7 in that trade. So 2%, 2.83. So I still have $193 of USDT to buy ApeCoin when it's done going down and try to get it going up again. So that's the beauty thing about margins, man, is that even though I took a $7 loss there, in reality, my $20 is still worth $193. So guys, if you want to learn a little bit more about getting into the right places like that, you need to DM me about getting into the trading courses so you know when to buy and when to set it. You know, this is all about the best entries, getting in at the right time and making sure it's all about just the runs, right? Because it's all about successful trading. Because remember, you only have to, if you have $100 and you make 10 successful trades that make 10% in margins every single month, meaning that, what is that? 1/3 of the month. So there's 30 days in a month and you need to make 10 trades, right? So literally four trades a week that make you 10% at $100 using margins will make you $100,000 in a year. If you want to learn that, that's called the master course. The mastermind course teaches you how to make 100 grand like that. But we have a lot of courses here. But guys, that is how you set yourself up to do longs inside of margins, guys. Appreciate it, man. If you have any questions, DM me. I'm always here to help you guys.